My name's Dave DeBoe, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Today, zooming in all the way from the Big Apple, New York City. We've got a very experienced and accomplished real estate entrepreneur, definitely a real estate entrepreneur. Adam Fischel has done a lot. He's worked on the brokerage side of things. He's worked in management side of things. He's very involved in syndications and being part of GPs and doing a lot of asset management. And Adam's got a little bit of a different backstory than some of the rest of us because he's one of those very fortunate, musically talented people. So he actually was a musician who got into real estate. So Adam, welcome to the show. Great to have you.
Great to be here, Dave. Thanks for
Again, I'm
having
fascinated. Tell me the story, man. What kind of music were you doing, and
me.
how the heck did that turn into becoming a real estate syndicator?
Everyone always wants to talk about the music side of things.
That's
Yeah,
because the rest of us are so damn boring, and we'd all love to be rock stars. That's why.
right. True. Yeah, so I was a professional drummer, touring pretty much my whole life. I've done everything, fly the private jets, five-star hotels, signed bands, Europe, all over the world. And then when my son was born, um, I didn't want to go I didn't want to go on the road anymore. So I decided to get my real estate license. And in New York, it's New York is the New York like Manhattan real estate landscape is pretty intense. I don't think it's like this anywhere else around the world.
Probably not.
And
Yeah.
and I started to do a lot of landlord representation and people who owned, big portfolios. And as I was running around like helping them like supersede their ROIs and like, I'm boots on the ground and I'm telling them everything to do. I'm like, what am I doing? Like, why am I running around for these people? I want to do it for myself. So, that brings me into like I started investing on my own as a GP and raising money and bringing in LPs into deals. So I still do that. I'm still scaling that business.
Mhm.
And on top of that, that also brings me to the asset management piece where I work now. And so I oversee about 1,000 units there. I work on their industrial portfolio. And we do investor relations there. I mean, it's a vertical like real estate company. So,
So,
uh,
so if I'm understanding correctly, you do your own thing as a co-GP on projects, and you're also working with another real estate company in the asset management side of things. Am I understanding that
correct. Yeah.
correctly?
So, yeah,
Okay.
I'm an
Yeah.
asset manager. We're an investment wealth management company. Um, we have about 180 investors there.
Hmm.
Like I said, I manage 1,000 units there, plus their industrial portfolio. And our industrial portfolio is, Fortune 500 companies, huge warehouse spaces.
Okay.
That's all around the US. And for me, that's really not uh, where I invest. But I've learned a lot being there and working, on the industrial side of things. I've learned a lot there just in general.
Yeah.
But everyone has their own, how they want to invest. For me, the multifamily space, the bigger it is, the less risk there is. Um, and so I was able to combine the brokerage side of things, just being in New York and taking all of that knowledge. And most of the multifamily I do is in like red states and like Midwest states because you have more control. Here in New York, I mean, there's so many laws. I mean, you can still invest here, but for me, I wanted, more autonomy. So I took that and took everything I learned here in New York and brought it to where I typically invest is in factory towns. And
Okay.
because for me, um, and I know probably a lot of people on these podcasts know, I mean, it's the amount of units is really the key factor. I mean, there's a lot of factors.
Hmm.
If I can get into, the entry point, for like say 100 units in a Midwest market in a factory town is, X as compared to like being in a big city. I do more like a class C, I'd say, for my own business.
What size cities are you typically investing in these factory towns?
They're
Give me a range.
small. They're
Yeah.
small.
Okay. Like
Yeah.
what?
Uh,
I'm in Canada, so small is relative, man. You're in
I
New
don't know.
York City, so
Yeah,
it's
30,000, 30,000. But
okay. Fairly
you
small.
can
Yeah.
you can backfill it. I mean, the product classes that I look at, I look I look for something very specific. I like the townhomes, so people can grow into it.
Okay.
It really just depends. You have to look at everything, but value add, and yeah, it's been great. It's been a really amazing thing, and I love what I do. Yeah,
Well, it's
it's
a really interesting kind of transition, right? So, starting off in the broker side of things, working with big city landlords in New York, managing their multifamily properties, and then, you know,
huge portfolios.
yeah,
Yeah,
yeah. And then getting into it yourself and kind of taking those skills and moving it to small town, factory town, Midwest. And then also now you're working for this other company in addition to that, and you're working on big industrial type properties, warehouses. So very, very, very different asset classes. Couple of
yeah.
questions come to mind for me, Adam. Number one kind of red flag that pops into my head about factory towns, especially 20, 30,000, it might be a one factory town. And what happens if that one factory packs up and takes
Right.
off? That's the big red flag I'm thinking of.
Yeah, again, like I say factory towns, there's other people in the towns that aren't just working in the factory,
Well, of course, yeah.
you know. And yeah, people need places to live, and I know people, watch and they want to make sure you can backfill the apartments and everything else.
Mhm.
But I've had great success, with it. You really just gotta study the markets and know what's out there, and yeah, it's been pretty amazing.
Well, that's fantastic. So, how long have you been syndicating and being a co-GP in deals for now?
It's about 5 years.
Okay, good. And now I'd like to just kind of talk a little bit about the industrial side of things because that's also very, very interesting. So, coming from your perspective, working a lot in commercial residential with apartment buildings,
Yeah.
now that you're up to your knees in industrial space, can you kind of compare and contrast those two?
It's interesting. Well, two things. I want to backtrack to the brokerage side for one quick
Sure. Yeah,
second.
yeah.
I think a lot of people, at least for me, the brokerage, I call it like the brokerage suite, and really knowing how to like broker out deals and like, getting leases signed, and um just knowing how to like fill your units and get the most money from your units. And that's brokerage, right?
Yeah.
Brokering the deals. That was a big part of like, marketing, all these things. It's very important. Like the brokerage side to me is sort of people push aside. So like I said, being in Manhattan, it taught me so much. As far as the industrials are concerned, for me personally, like, asset managing these industrial portfolios that I've worked on, I've seen great results and great returns. Um, but also depending on how big, like we own industrial parks, or how big these warehouses are, sometimes they're single tenant.
Yeah.
And the other thing is too, more and more lately, um, the older industrial spaces are like square footage wise bigger, but nowadays the newer companies are going like vertical, like cubic feet wise.
Hmm.
So these older like warehouse spaces, they're sort of outgrowing, and they're looking to go on the newer spaces, which are more like vertical,
Wow.
more cubic feet.
Interesting. Yeah.
Um, and so like for me, the risk of like having a single tenant is something that I'm like, oh my God. But there's a lot of advantages, to doing industrials, and like there's a lot of people who do great in that space.
So
And
when you're talking about these kind of warehouse type situations, am I thinking Amazon? Am I thinking Walmart? Am I thinking Costco warehouse? What is it that kind of stuff?
yeah,
Hmm.
it's so funny that you mentioned some of those names. Um, because yes, they're all like the big companies. Yes,
Got it. Well, I can
you nailed you
understand
nailed
the
you nailed what you nailed one of them.
okay.
One of them.
Well,
One of them actually, we just sold one of our assets to one of them, which was kind of interesting. Uh,
okay.
yeah. So yes.
Yeah, I can see the concern because up here in Canada, for example, there's a province called Quebec, and Amazon just announced they're pulling the plug on that whole province. Like one of their warehouses they unionized, so basically Amazon just said to heck with this and pulled the plug on the whole thing. So I'm thinking, geez, if I were, I don't know if they own their own properties or if they're leasing, but if I was the guy with those properties, I'd be quaking in my boots right about now. So I see where you're coming from there.
Yeah. I mean, and also like we bought certain warehouses with these big companies with the fact that we knew they were probably going to exit. And so we were going to get a new tenant in place. But at the exit, they have to buy, I mean, there's a settlement, a huge
Yeah,
settlement to get out of the lease. So it's just whatever your risk tolerance is.
yeah,
For me personally, it's not, I mean, the more and more that I work on them, I'm like, maybe, but I'm more, I just, I don't know if I have
yeah,
the risk tolerance to like sit there and be like, I like having 100 boxes, like in
yeah.
one,
With 100 people paying you money, and if a couple of
yeah,
them don't one month, it's not that big of a deal.
right,
Yeah, yeah.
exactly. And yeah, yeah.
So Adam, question for you: when it comes to your syndications,
Hmm.
what's your primary role in that as a co-GP? Are you on the asset management side, the capital raising side, a little bit of everything? What does that kind of look like?
Yeah, I mean, the deals that I'm doing, as a co-GP, I would say, um, roughly like, let's say, anywhere between, 1 to 25 million. Like I'll
Hmm.
just make it very broad.
Yep.
So, when I'm looking for investors, accredited investors, and it could be anywhere from, you know, let's say a $500,000 raise to like a $3 million raise, or somewhere in that space. So
Right.
yeah, I'm getting the investors on. I'm doing everything as the GP. Yeah.
Oh, you're the like, do you have co-GPs as well, or
I do
you?
have a yes, I have a business partner.
Okay.
Yes,
Yeah.
yes. And we control the deal. We know what we're doing. And then LPs just come in and like um one of our assets within 6 months, 30% return, recapitalized all the investors, still own the asset. And that's at that
Nice.
particular point, the cash flow is infinite returns,
Yeah. No, that's
right? Because once
that's
you get
that's what that's where we're all trying to get. That's for sure.
Well, right. I mean, and that's the thing is at the LPs stay in the deal. Like a lot of the
Mhm.
times people, depending on what they invest in, you get recapitalized, but they still don't control the asset.
Right.
And for me, a big part of it, and again, everyone has their own investment strategy. If you really believe in the asset, like why would I want to sell it?
Yeah. Exactly. That's
So
one thing I never quite understand is all these syndicators just getting in for the 4 or 5 year hopefully pop of cash at the end. It's like, what about the long term play on this, right? And what about doing
yeah.
exactly what you're talking about there, right?
Like I've helped, I've been approached by a lot of people to help, do, equity raises, and like I want to know that they believe in the deal. Because if I'm bringing investors in that I know and people that I know, I want to know that they believe in the deal. Now,
Yeah,
listen, the market can always change and things can always happen, and I get that.
of course.
But the point being is like, are you coming in just to get acquisition fees, or do you believe in like,
I think a lot of people are. That's the
yeah.
challenge, right? Or a
I mean,
lot of people were, and now they're got their
to
pants
me,
down around
to
their
me,
ankles, kind of thing, right? So,
right. I mean, to me, the way you grow a business is that you believe in the asset. And when I sit down with people, they know I believe in the asset. Putting my own money into the deal,
mhm.
and I'm managing the deal. And to be honest with you, some of the deals we do, the investors are like more protected than we're like feeding them first.
Yeah, yeah,
So yeah, it's just something that, if you want to grow a business, that's the way I believe. And again, everyone does things
But
different.
it sounds like you've gotten very, very good at raising capital. Do you have any tips, tricks, or suggestions for people that are kind of getting started, doing their first syndication, doing their first capital raise for a multifamily or a
Yeah,
commercial
sure. I
deal?
know the numbers, right?
Yeah.
Believe in the deal. That really comes across, know how to pitch a deal. I mean, I was in various mentor groups where, like, I can take the heat, You really have to know, like, and objections are good, right? If people are giving you objections, they're interested. If it's radio silence, they're like, okay, I'm not wowed by the deal. Like,
Yeah.
you gotta come with it. You know, get around people who are doing it, get around mentors, join those real estate clubs of all the people who, do the multifamily thing. I will give a big shout out to, I mean, Grant Cardone, which a
Mhm.
lot of people probably know. Um, I mean, I've been in his real estate club, and it was very, very beneficial. I've pitched to Grant directly, and I had the thing is, from being around those people and listening to them talk, you have the answers. Like, he'll say something like, Adam, like, this deal's in the middle of, factory town. There's like probably, dead people in the trunk of the car somewhere. And what my response to him was, yeah. And your place on the beach in Boca, you said 2 weeks ago someone got killed on the property, and they were like, so it doesn't matter. There's people getting killed on all the properties. Like,
Yeah.
he
Yeah.
laughed, so you got to know how to answer these questions, right? You know, so
What do you find most effective for you these days for connecting with new accredited investors?
um, I mean, networking, right? I mean, the more hands you shake, the more money you make, right? Private clubs, financial advisors, the real estate clubs. Um, yeah, I mean, just getting around people. And then I mean, if they're just starting out, family and friends, like everyone says, right?
Right.
And but actually, to be honest with you, Dave, like, if the deal brings the investors in, you know, like, it's really about the deal. Like, if you really know what you're doing and you really know how to present it, like, you find the money. Because the first thing is, people don't understand the bank's going to give you the money, right? The bank's not going to just give you the money if they don't believe in the deal, right? So,
Right.
so, like, the bank's your friend. And then, you,
Get the
it's
word out. Yeah.
yeah, I mean, it's really is about the deal, right? It really is about the deal. Like, if you don't know the numbers and you don't know what you're doing, you're not going to be able to, like, bring people in to want to invest with you.
No,
You
that makes a lot
really
of
have to know
sense.
what you're doing. Yeah.
So as we're wrapping up our conversation here, Adam, what are your plans on your personal portfolio side, your personal syndication business side for this year for 2025?
I'll give someone an example. I got a text yesterday, a guy near one of the properties that I own. The text was, "Hey, you contacted me 3 years ago about buying my property.
Mhm.
I want to sell. Are you still interested?" I said, "Yeah."
Nice.
And this is another good piece of advice that I learned. You always tell people you love the property, right? You don't beat someone up when you're trying to get a deal, I
That's good
love the
advice.
property. I really love the property. I want it, would you mind sharing, what the expenses are? Can you share this, whatever? But that's a really big thing, right? You don't just pick up the phone and, say, start beating the guy up about everything, you know?
Well, yeah, and that's kind of counterintuitive advice that you're giving because you hear that stuff so much, right? Especially with the I buy houses kind of guys and all those, drill drill the heck out of people and beat them up and get the lowest price possible. But you're saying do the exact opposite, butter them up a little bit and compliment the
Yeah,
property.
of course, like, say
Yeah.
you love the deal, and then you get to the numbers and get, if you can make it work and make, everyone's coming to the deal with the same debt issue. Everyone's coming, the debt market's the debt market. So
Mhm.
unless you have all cash, everyone for the most part is going to come close to, like, the same numbers, right? With a little
Yeah.
bit of, like, variance, room there. Um, so as far as myself is concerned, we're just scaling. Like I said, this guy contacted me about, that I reached out to him 3 years ago. I'd love to get the deal done with him. Um, yeah, I mean, I'm almost like just want to send him a contract and then get into, DD
Then
with,
get into negotiations. Yeah.
yeah, like,
Tie it
yeah,
up. Yeah.
yeah, yeah, exactly. So yeah, I just really want to scale and I want to take everything that I'm learning now with like the players that I'm with in New York. I want to become, I want to run my own thing on a high
Awesome.
level, right?
Yeah.
Yeah. Yeah.
Makes sense. Adam, this has been great. If people want to connect with you, where should they go?
I think LinkedIn's the best way to go, just look up my name, Adam Fischel, and I love to connect with anyone. And actually, if anyone has any questions and just, I love talking about this, as you can tell. So, I
Oh,
love
that's
connecting
great.
with you. Yeah.
Well, Adam, thanks very much for being on the show and all the best with your endeavors this year. You got some exciting stuff coming down the pipeline. I hope this deal comes through.
Thanks, man. Thanks, Steve.
All
Pleasure
right,
to.
everybody, take care, and we will see you on the next episode. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now, at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.